Welcome to How to Read Financial Statements for Not-for-Profit Organizations. I'm Jackie Williams, the Director of Finance for Rayborn Group International. Today I'm going to talk to you about the two most common statements issued for not-for-profit organizations. The first is the Statement of Financial Position, which in the for-profit world would be known as a balance sheet. We're also going to talk about the Statement of Activities, which in the for-profit arena would be known as the income statement. But before we go into those details, I want to talk to you a little bit about fiscal years and accrual basis accounting. A fiscal year is a stated period of time during which an organization records its activities and operations. The most common is a 12-month time period, and it follows the calendar year. But it could be any specified period of time, although it's rare to be anything other than 12 months, and it could start and end in any month during the year. Accrual accounting records transactions as they are incurred, not as cash is paid or received. So as an example, if you purchased a product but you have not yet paid the vendor, it's still recorded as an expense at the time you make the purchase rather than waiting until the cash is paid. Today we're going to be covering the financial statements for the Society for Kind People. Here you see the Statement of Financial Position, and it shows that this statement is being issued as of September 30th. It shows only the results for that given day. Tomorrow, these numbers would all change based on any transactions that occurred between the 2 days. So for instance, cash would change based on any deposits made or payments made. The Statement of Financial Position has 3 sections. The first is assets, which represents things that are owned or owed to your organization. Liabilities, which represents items that are owed by your organization to somebody else. And net assets, which represents the cumulative results of all operations throughout the organization's history. Using the nomenclature from the for-profit arena of balance sheet, that's an indication that this statement should balance. Liabilities plus net assets should equal total assets. So your first lesson is, if it doesn't balance, you've got a problem and you should ask a question. The first items you usually see under assets are cash and investments. Cash is very liquid, meaning you can get your hands on it very quickly. Investments might consist of something as simple as a certificate of deposit, or it might be something more complex like stocks and bonds. They are not as liquid as cash because it might take some time to sell the stocks and bonds, or you might have to wait for the maturity of the CD in order to access those funds. If your organization has an investment policy, make sure that you understand the policy and that the policy is being followed. Most organizations have accounts receivable, which represents products or services that have been sold to your customers, but for which the customers have not yet paid you. If this is a large amount relative to cash, be sure you ask some questions about it. Why does the receivable exist? When will you receive payment for it? And how long ago was the sale made? If it's more than 60 or 90 days, there should be a pretty good reason because most people make payment within 30 days. You might also see some items called prepaid expenses, and this represents items for which your organization has made payment, but the service or products have not been received. So if we use an annual conference as an example, you might make an advance payment to a convention center for an event that happens next year, but you made the payment this year. So that convention center owes your organization the use of that facility at a future date. Inventory represents items that your organization sells, such as educational materials or perhaps promotional t-shirts, things like that. If you have a significantly valued quantity of those items on hand, you'll see inventory. But if it's just a stash of those materials, you probably expensed it when you bought it and it's not enough to worry about putting in inventory. Fixed assets. Fixed assets are items that are usable over multiple years, and so under accrual basis accounting, you're allowed to spread the cost of those assets over multiple years. So while there may have been an immediate cash outlay, or likely an immediate cash outlay, you don't have to record the expense all at that same time. A fixed asset could be something significant like a building, but for not-for-profit organizations, you're more likely to see something like a website. And websites have useful lives of 3 to 5 years. So what happens is when you purchase the asset, you put it here on the statement of financial position, then each year over those 3 to 5 years, you recognize a portion of that as expense, and the depreciation accumulates here on the statement of financial position and shows the net remaining value of the asset. Now moving to the other side of the statement, let's take a look at some liabilities. Liabilities are amounts that are owed to suppliers. The most common is accounts payable, for which you have purchased products but you have not yet made payment. So if accounts payable in total is equal to or greater than the sum of cash, investments, and accounts receivable, that's a red flag. So be sure you're asking some questions and looking at that ratio. Another common liability is deferred revenues. Deferred revenues occur when your organization has received money for a product or service, but you haven't provided the benefit to that individual or organization. So let's again use the annual conference as an example. So this year, exhibitors are making payments to your organization in advance for an event that doesn't happen until next year. So you still owe those exhibitors the benefit of displaying their materials at next year's conference. So all of that money is considered deferred revenues for this year. The other instance in which a not-for-profit organization has deferred revenues is when the membership year doesn't match the fiscal year. So for example, if you have a calendar year, fiscal year, but your membership year doesn't start until July 1st, that's when your renewals are coming in, then as of December 31st of each year, you still owe your members benefits for the first 6 months of the following year. So a portion of the money received for dues gets deferred until next year. You might also see things called accrued items. An accrued payroll is a good example to use where employees worked during one month, but they aren't paid until the following month just because of the timing of the paychecks. So looking at net assets, again, as I noted earlier, net assets represents the cumulative results throughout the history of the organization. Not-for-profit organizations are required to show net assets with donor restrictions and without donor restrictions. A restriction occurs when somebody gives money to your organization for a specified purpose like scholarships. If no designation is put on that by the donor, it's considered without restrictions. The other item of note for net assets is current year versus prior year. The current year should equal the year-to-date change in net assets on the statement of activities. That would also be called the net income or loss year-to-date. And the prior years is as it would indicate the accumulation of all the prior year's results. So let's take a look at the statement of activities. Here you'll see that the Society for Kind People is in the 9th month of its fiscal year. And because it's a calendar year, that equals September. It's fairly common to see both the current month compared to budget and the year-to-date compared to budget. In this example, we're also showing the annual budget. And the annual budget is your guide to see how close your organization is to achieving its revenue goals or reaching its spending limits. You'll see three basic sections. You'll see revenues, expenses, and changes in net assets. The change in net assets equals revenues minus expenses. If your organization has several key program areas, you might see separate detailed schedules to help isolate the profitability of those programs. The Society for Kind People has membership services and annual conference as its two key programs. What you see on this schedule, the combined schedule, are totals only, total revenues and total expenses per program. Of note on this schedule is that on a year-to-date basis, the Society for Kind People is tracking over $21,000 below its budget, and the annual budget in total is over $19,000, and that's an increase in net assets. So at this point, with only 3 months left in the year, you might be a little bit concerned. So let's take a look at some of the detailed schedules and see if we can learn a little bit more. So this is the member services schedule. Revenues represents income earned by your organization. Keep in mind that revenue does not necessarily equal cash. You could have sold a product and the customer hasn't paid you yet, resulting in accounts receivable. Some typical revenues for member services would be dues, but we also show here revenues for scholarships and revenue from interest income. Expenses represent cost incurred by your organization. Again, for accrual basis accounting, that does not equal cash. You could have purchased a product and you still owe your vendor money, resulting in accounts payable. There are way too many possible expense categories to cover, but these are some of the typical ones that you might see. But your organization could have any number of different revenues or different expenses, but the concepts here all are the same. The third section is the change in net assets. And again, in a for-profit arena, this would be known as net income or net loss. And it equals revenues minus expenses. We note here on the member services schedule that the annual budget is a deficit, which tells us that the conference must have a budget sufficient to make up the difference between this $14,000 deficit and the $19,000 increase in net assets from the combined statement that we saw just a bit ago. But we'll take a look at that a little bit later. So let's talk a little bit about the variances that you're going to see current month versus year to date. When you're looking at the current month, keep in mind that it's highly susceptible to timing differences, meaning that something was either paid or received in a different month than what the budget anticipated. And that can occur for any number of reasons. Timing changed year to year, a vendor invoice was late, something like that. When you look at the year-to-date variances, it's a little bit more reliable and less susceptible to those timing differences as you get further into the fiscal year. So specifically here, we're looking at the variance in membership dues, and we can see that both in the current month and year-to-date, we are behind the budget. And with only 3 months left, you again might be asking yourself some questions about what's going to happen to that. Do we have a big campaign planned in the fourth quarter that's going to bring in new membership? Is this just a downward trend because of economic conditions? And isn't it going to be a permanent variance for the end of the year that you're just not going to meet your budget? If we move now and look at insurance expense as an example, you see that in the current month, we have an expense, but we don't have a budget. But if you look year to date, we do have a budget, and it agrees to the actual, or I shouldn't say agrees, but it's in line with actual. And so that tells you that we had a timing difference, that we expected to make that insurance payment in an earlier month. It's also worth noting that the annual budget is the same as the year-to-date budget, so you're not anticipating any further spend for insurance this year. So here we have the annual conference schedule, and sure enough, there's a big increase in net assets that the budget is anticipating, which is sufficient to cover the loss in membership. Typical revenues for a conference would include things like registration, sponsorship, exhibits. Expenses would include things like speaker honorarium, food and beverage, audiovisual. But again, your organization might have lots and lots of different line items and different revenues. So looking at the revenues for the annual conference, you see that we don't have any budget or actual for the current month, but we have quite a bit for the year-to-date comparison. You'll also note that the year-to-date budget is the same as the annual budget, so that's probably an indication that the event is over, and you likely would have known that if this were your organization. It's also worth noting that, especially since the event is over, that there was a shortfall in revenue compared to budget. It looks like they came in $4,500 less than what they had hoped. At the expense side, we do have expenses for the current month, even though we don't have any revenues. But that's not unusual because sometimes there's a lag between getting your vendor invoices from the conference because they needed to know what the total was going to be and wait for that at the end of the event. And we actually anticipated that that was going to happen because we have a current month budget. If we look year to date, we'll see that overall the expenses were more than the budget. And that is not good news because we also had a shortfall in revenues. And it's also worth noting that the annual budget and the year-to-date budget, again, are the same. So you have spent all of the money plus some that the annual budget anticipated. So the annual conference did not perform as expected this year. So we've looked at all the details, but you gotta also look at the big picture. So if this were my organization, I would be asking questions like, why does the member services program budget a deficit? Should we be increasing membership dues in order to balance that budget? Or have we just been seeing a downward trend due to economic reasons? Are we okay with the annual conference subsidizing member services? And for the annual conference, I'd really want to know why were revenues short? What happened? Was this an unpopular location for our event? Again, maybe there was some downturn in the economy. Why was there an overspend? What happens if we continue to lose money on the conference? Is this a trend that we're going to see going forward? And if so, what happens to member services? Because you can't operate at a net loss and have your organization continue into the foreseeable future. The Society for Kind People had kind of a bad year, but hopefully your organization isn't. So be sure you're also asking, what are we doing right and how can we capitalize on those initiatives? As leaders in your organization, you are accountable for the financial activities and results of your organization. So be sure to educate yourself about the financials and ask some questions if you don't understand. I hope you gained some useful insights from today's presentation. To learn how Rayborn Group International's expert advice and innovative solutions can help your organization thrive, visit www.rayborn.com.